Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, October the 2nd, the year 2018. Let's talk trading. Have a plan. Many, many people, traders out there talk about, you got to have your trading plan. I just saw it, I think it was last week, one of the trading newsletters or emails, whatever you want to call it, that I receive on a regular recurring basis. It's talking about good trading and having a plan. And those of you who've looked at, some of my other videos on my channel know that I'm a prepper. And, we talk about having a plan for disaster preparedness. But, telling somebody to have a plan is one thing. Showing them how to develop a plan or giving them a template is a whole different thing. So I was thinking maybe I just would tell you a few things about a plan. I mean, we're talking about trading. The market's in motion, right? Prices going up and down, news events. There's just a lot of stuff happening. So, how do you have a plan for that? Well, one of the things I like to do is, reduce the number of variables to a manageable amount. So rather than trade every stock and every pair under the sun, I try maybe to trade one or two pairs. And that's about it. I might look at other pairs, but unless something is just glaringly telling me to take the money, drain that bank, I'm not going to do it. So as I go through the charts today, maybe I will discuss that. Maybe something will ring true to you, or maybe you'll find something you can use in your plan. I know one thing you better have in your plan is money and risk management. I knew you traders knew I was going to say that, right? Anyway, plan. Well, as you know, I like to trade horizontal lines, particularly the high, top, bottom, and low of the previous candle. Doesn't matter the time frame. So you see here we were in the upper wick zone and we take an exit out and we're 54 pips to the good. I mean, you had a chance almost making 80 some pips on that trade, right? So the plan is if the pair I'm trading is in a wick zone, I'm going to trade when it leaves that wick zone. Let's look at the week. You right here. Same thing. See 130, 189. Right? Or actually, I'm sorry. It's hard to say. I think it's 132.03. Yeah, 132.03. That was the top or the bottom of the upper wick zone right there. Top of the candle, bottom of the wick zone, that exit right there, or that entry, I mean, that was worth 130 pips, give or take, right? That one trade this week, and it's only Tuesday. So having that plan shows, and you see here, even if you missed that one, you still had a chance here when it exited the lower wick zone to pick up 48 pips plus or minus, right? Simple plan, simple trade. Don't have to do a lot of number crunching. And it proves to be profitable. And once again, you see here we've got some gaps that haven't filled. Now I'm noticing something here. Canadian, a lot of these Canadian pairs haven't filled the gap. Something to take note of. On the daily chart, real simple here. You see, price was in that lower wick zone. It exited to the north, good for about 14 pips if you took that trade. But to the south, that was good for 100 pips plus or minus. So once again showing how that one simple trade and that's in my plan, just following that and looking at the different time frames and just trading those lines, profitable. So you see here we had a short at 131.73. There was a short at 132.03. And then there was a short at 131.89. So right there, 3 opportunities. Or if you stack them, 3 trades, all highly profitable. On the daily range, 1, 2, 3, 4, 5, 6, 7, over 100. Euro yen clocking in at 128 compared to 43 dollar yen. That's about 3 times the difference, showing how you have to analyze your pairs that you're trading or the pair that you're trading. And then once it stops producing, then you move on. You see here, buy zone trade. These are the Harry hindsight trades, right? But not really, because we do the same thing every day. So there was an opportunity to go long here. If you went long, you should have scratched that trade. You had 2 chances to, I'll take a couple of pips off of it, but that was a scratch. There was a nice short right there. And that was it. Rat zone, it fell out of at this point there wasn't a rat zone trade. Down here there was. You can see here you had a bunch of opportunities to go long at 130.91. Right now you'd be up how many pips? About 47, 48 pips. Actually, you should have taken profit somewhere along here. See, it got out of that upper wick zone. See that big long candle? It's like, wait a minute, that's a big long candle. Price needs to come back down. So once when it exited the upper wick zone, take the profit there. I mean, are you going to sneeze at a 50 pip profit? I don't think so. You may have exited right here too. That would have been a possibility. But once again, if you were to do that, maybe you took all of it. That's 30 pips. Maybe you exited half the position, locked in some profit, move your stop loss somewhere, maybe here, or maybe just +1 and let the rest ride. Simple. And that's part of your trading plan. Do you take all the profit? Sometimes you do. When it's a scratch trade and it's just a couple pips, you just take them all off the table. You don't let it ride. When you have a nice large profit, maybe you take half off and let half ride. Or maybe you just move the stop up and ratchet it up. Once again, your choice how you manage and plan the exit of a profitable trade. Once again, we missed the pivot. Big, long 4-hour bar to the south. See, we missed that pivot, so look for that 132 to be taken out sometime. And when you see we have a missed September and a missed August. Price action trading, 1 ball top, red at the line, shorting, 3 ball at the bottom, green at the line, long. 1 ball at the top, red at the line, short. Once again, simple trading plan. You know what to do when you see the semaphores appear. Horizontal lines. Here, once again, simple trading plan, candle color at the line, once again, proving to be profitable, right? Wick zones, already covered them. Price doesn't like staying in the wick zone, in and out, right here. That looks like a scratch trade to me. That looks like a really nice trade to me. If you nailed it, once again, over 100 pips, you just take it. Holo setup here. You can see highest open right in the beginning of the day. Lowest open. Nice bounce back. Really nice bounce here. About what, 65 pips plus or minus. You just can't refute how nice these trades are. All part of the trading plan. Inventory reduction bars. See, we had a short opportunity here. And there was a long opportunity there. Daily, weekly, monthly, open, high, low, which, if you remember, these are all part of the wick zones. We just don't have the close, which would either be the top or the bottom of the candle. But this is all pretty much the same trade, just on one chart. Makes it easy. If you just want to look at the one chart, okay, you see previous week's low, we jumped out there. But in this case, in wick zones, we only trade out of the zone. On this one, we decide to trade with the candle color, H1 candle color at the line to make the trade. And the tick chart, you can see here, about 10 pips here. Right there, the ask price got below the peak of the bid, and there was a short right here. And then the bid came above the ask. So you can see from, actually, it's interesting. It doesn't work on this chart because this is a, once again, this is a sub window. Einstein lines. I open the chart. There was a little short possibility, a long possibility. You can see some chop. But if you look at this formation here, you would think, okay, you might want to take that breakout here, or that nice long candle. You see it hit that top, didn't quite go past it. So coming the other way, you might take that trade, or you might have entered all these. If you did, you would have gotten stopped. If you only traded one direction, might have been more profitable. Once again, what's your trading plan? Do you trade long and short, or long or short, exclusive, or meaning you only trade long or you only trade short? So that's it, fellow traders. Remember, you have to have a trading plan and execute that plan. But above all, it's not what you trade, it's how you trade it. So it's Tuesday. Let the draining of the banks continue.